Well, hey everyone, thanks. Welcome to a live edition of Power Forward here on Solar Builder Radio. As he said, I'm Chris Crowell, Editor-in-Chief of Solar Builder Magazine. And yeah, thanks to SunCast Media for letting us have this time on the PowerUp stage here at RE Plus 2025. So Power Forward is a video and podcast series we do in collaboration with BayWa RE. And right here we have Josh Tinaglia, Finance Program Manager. And we're here to pick Josh's brain about everything going on with resi solar financing in the wake of so many changes and challenges to the market. There's obviously everything that was in the OBBB, how many Bs are throwing in to abruptly alter the business of residential solar because of the 25D tax credits going away in 2026. But the ITC will still be accessible via TPO financing. Then there's these FIAC rules that are still, we're trying to figure out how that's going to factor into things. And so just what the outlook is in 2026. So, Josh, with that being said, with some distance from the bill now and the reality of 25D going away at the end of 2025, what are you hearing from installers? Let's start there. Are they panicked or they feel like they're ready to go? Or?
That is such an important question, right? Like, all installers right now are either at a place where they've had record months, record quarters, because they've absolutely crushed based on, the looming incentive going away. So there's panic at the end of all this, but right now, I think the rosy glass is on. There's a lot of optimism around, okay, we've done a really good job of selling out this year. There's a lot of installers. Depends on the market. Obviously, some markets need a little bit more runway, but there's a lot of installers that have sold out for this year. But that doesn't change what happens December 31st, right? So there's panic because no one knows, right? There's a crystal ball in front of all of us. And we're trying to figure this out. And the crystal ball is telling each and every one of these installers, where do I go next, right? So the panic is, there's just a lot of unknown. And you mentioned it, FIAC plays a big role in that. But it seems like a lot of the direction is going to be going towards just what you said, and that's TPO. Yeah. So yeah, panic for sure. But we've been here before, so we'll figure it out.
Thinking about going to the end of the year when trying accumulating maybe more business to get the tax credit before it goes away, right? Is there anything installers should be doing to maybe help them in that get deals done faster, or maybe have cash on hand in a way that eases these deals and gets things going toward the end of the year?
Oh, 100%. First of all, take a deep breath, everybody.
Yeah.
Right? Like, let's not rush into a decision. I think that is the biggest thing you can do as an operator of an installer right now, is just take a deep breath. Start to look at your customer base. Who are your customers? Because that's going to help you try and figure out, where do I go next? Yes, it does seem all roads lead to TPO, but there's different flavors of that, which we could touch on a little bit. But at the end of the day, have cash on hand, right? Have some reserves, be a smart operator. You've got to make sure you can cover your bases, your payroll, your rent, etc. But really look at yourself and your customer base, because if you know your customers well enough, you know how they'll want to buy, given what the new finance mechanisms are in 2026.
Yeah. So with the sunsetting of 25D and the forecasts of how that will impact the market, what the demand will be, sticking with just loans, okay? How is solar loan financing itself being impacted by the tax credit going away?
Going to be a lot of good news for folks. Dealer fees are probably going to start to go away. We'll see less of them because there's no way to really make up for that with a tax credit, and not hide it, but there's no way for a dealer fee now to be as, let me say it another way, the dealer fee is more exposed now more than ever without a tax credit. So that's going to change. We're going to see a lot of lenders going back to the drawing board with new products, right? Maybe longer-term loans to try and compete with TPO, to compete with everyone's competition, and that's utilities. So longer loans, new introductory periods being introduced, SunGauge being one of them. They have a new introductory period. I want to say it's 24 to 36 months. They give a customer a low intro payment, and that changes after 2 to 3 years. I might have a year off.
Yeah.
That's why I give a range. So we're going to see a lot more lenders coming out with new products that help incentivize homeowners to go solar, still own the system for yourself going into next year. And there's a fit for that. There's going to still be homeowners who are adamant about owning the system as opposed to TPO, even though it might be cheaper. So there's still a place for loans. It might not be as much, but crystal ball will tell us next year.
Yeah, I mean, and it makes sense to me with my consumer hat on, because I consume things, right? I'm not an actual installer. And if I wanted solar in my house, I would want to own it because it adds value to my home. Leases, it doesn't necessarily, right? So there is still an incentive to whatever, how the price might change for that homeowner to want to own it, right? What else could be influencing rates between now and into 2026, maybe beyond what we're thinking about as the solar industry, but just generally with the market and interest rates, and is there anything else you're paying attention to that could influence things?
Yeah, a couple things. I mean, outside interest rates, which we're hoping go down this month, just had a really bad jobs report recently that's going to drive Jerome to probably think more about dropping the rate, which is nice. Tax equity, I think, needs to be paid attention to a little bit more, right? A lot of these TPO products are based on what's available. And if there's a flood to the tax equity folks of, hey, TPO products, they might take a pause and there might be more diligence done on some of these jobs, or not these jobs, on these mechanisms. So I'm looking at rates, I'm looking at the tax equity folks, and what TPO products are coming online. There's not much time between now and next year for some more products to come on, and installers need to get on those and start selling them now if they're already sold out. So there's a couple things at play.
Gotcha. Okay. Yeah. So that lone win in the One Big Beautiful Bill was that preservation of the commercial solar ITC for residential leases. That's why we've been talking about TPO a lot, right? But at the same time, some of the biggest names in that space have filed for bankruptcy within the last 15 months or so. So I guess how should I feel about that TPO space is there still a volatility that I should feel about it, or now that some of those bankruptcies have gone through and that maybe things have settled and with the new entrants in the market, how should I be feeling about, this is where things are going, I guess, but is that a good thing? I don't know.
Right, no, look, having lived as an installer for years, coming back to it with my installer hat on, there's definitely a lot of risk involved in trying to find a TPO partner to basically go into bed with next year, right? You want to make sure you're not getting in there with someone who's going to be a bankruptcy risk or doing these mechanisms that might look shady from the outside. Because ultimately, you have to serve your customers, right? You have to think what's best for my customers. So if I'm thinking with my installer hat on, I am looking at all of these TPO providers with a little bit more scrutiny and asking really hard questions. And how you source those questions is entirely up to you. If you can reach out to me, happy to help load you with those. Or go to ChatGPT. I'm sure you could have a wonderful conversation with an AI to try and figure out what to ask these folks. Because ultimately, if you're going to put all of your money in that bag, be mindful of how they're sourcing their funds, how they're trying to help, you help your customers. So, trust but verify, I think is a good way to look at it.
I recently heard about prepaid leases emerging. I'm unfamiliar with that, though. How do you feel about prepaid?
If you asked me 10 years ago, I'd say a very different thing. These aren't new products.
Yeah.
They're getting dusted off of shelves right now.
Okay.
So it's something that I think SunPower and Sunrun used to do. It was before my time. But think about them as a really good option for your folks who would be cash buyers. Right now, they're looking at this prepaid lease as an option to pay. Maybe we'll just use round numbers' sake to make it easy. 70% of a project, where this TPO provider, and they're still TPO providers, they come in and they take that 30% tax credit, maybe more if there's domestic content. They can also take depreciation on the system because they're a commercial entity. So if you want to look at prepaid lease, simplistically, it's a cash buyer coming in and buying a system for themselves that they get to own maybe in 6 years after the TPO provider has consumed all of the tax goodies. So it's a very viable product if your installer is someone who does a lot of cash business.
Okay.
Right? So again, you've got to look at yourself, look at your business as an installer and say, okay, who are my customers? How do they typically like to buy? Now I got to look back at these finance mechanisms and say, what is most similar to that type of purchase? And in my mind, if I'm a cash buyer, homeowner, now I'm putting my homeowner hat on and I have cash, prepaid seems to be my option if I'm not selling my house within that time period. Because then it becomes tricky.
Yeah.
So that's a conversation probably for another day. But
yeah. In general, that sounds tricky to me, the whole thing. So
these things are hard to spin up too.
Yeah.
These prepaid leases, they're not as easy as just a normal lease or PPA. There's a lot more into it. So they're cumbersome for sure. But we'll see some come out here soon.
And since I have you here, there's just other nuances. I'm not a finance left-brained person in general, you know, so there's things I want to still understand, and maybe others out there do as well. The importance of tax credit transferability for resi solar financing. Can you explain that, I guess?
Oh boy, I am not an expert in that either. So my finance brain is, I don't want to tell people the wrong. In fact, I should have started this conversation with, I'm not an accountant, nor am I a lawyer, any of those things. So having the ability to transfer those tax credits to another entity is going to be helpful to keep liquidity for these tax equity providers. Basically, that's just allowing you to pass a tax credit from one entity to another, as far as I understand. Having that in place is super helpful for these types of transactions to go through, because there's multiple layers. You have a TPO provider, you have investors, whether they be high net wealth investors or they be, you know, municipalities or something of that effect that can take on these tax credits. So the ability to basically pass around tax credits is really important for these mechanisms to work.
Yeah. So you don't have a sense of what the appetite is for things in that space?
Yeah, I would say I don't know what their appetite is, but I do know they look at them with a little bit more scrutiny because of I think it's the insurance they have to get coverage on those tax credits for that makes some of these transactions less smooth, we'll call it, which adds cost, right?
Yeah.
Because you can't just trade a tax credit dollar for dollar necessarily. Someone's got to to make some money on it, right? So that's where this gets a little bit tricky.
So you mentioned it at some point, the magic words of domestic content, everyone's favorite term. You know, the extra 10% tax credit's only going to be relevant in the TPO deals starting in 2026 in the residential market. And at one point, domestic content was viewed as mandatory for doing a TPO by certain providers, you know, like the Sonova. Is that still the case? How important is domestic content right now in TPO?
Well, I guess, I don't know if I've mentioned it yet in the conversation, but I work for a distributor.
Yeah.
Yeah, so right now it's a really weird conversation to have because there's not a lot of equipment out there, period, let alone domestic content. There's been some big players that have come and made some big purchases, whether it be through us, or our competitors, but the availability of domestic content is really hard right now. So when you ask that question are those rules going to change? Are they going to, maybe push back domestic content? I sure hope so, right? The idea would be maybe they come up with two kind of paths. One be the domestic content path, and another one to be avoiding the FIOC rules to make them compliant, right? Because then there's more availability in that bucket. So right now there hasn't been any huge shifts, but those conversations are absolutely happening, and I can vouch for that.
Gotcha. Yeah, so on the FIOC side of things, there are just so many acronyms and things happening, right? How does that fit into your outlook that we're talking about? I mean, it seems like that's still a bit unknown, how those rules are going to play into what it's going to hold back in terms of going forward with domestic content, maybe even for going for a TPO at that point. I don't know.
I mean, look, we don't know what the rules are going to start to look like until first half of next year. Those rules will start to get drafted, right? And then by the end of next year, those rules will become official on what FIOC stands for. And it could, or not what FIOC, we all know what FIOC stands for.
Yeah.
But what it actually means. And also, is it going to be the supply chain of these manufacturers that we're looking at, or the ownership, or some combination thereof? So yeah, that is a huge challenge if you're an investor trying to figure out your tax equity piece of things, because you're going to be looking at that saying, okay, when this job is installed, is FIOC going to be ready? Is the compliance standard going to start now? And obviously, I don't have a crystal ball, but given what the Treasury has already done with Safe Harbor, which was they don't retroactively punish folks, right? They made the 5% the same throughout. Lots of big numbers were being thrown out. And I'm going off on a tangent. I'll come back in a second. So lots of big numbers were going and gotten thrown around about the percentage of what Safe Harbor was going to be and if it was going to be retroactive, which it wasn't. So the Treasury has already proven maybe they won't be going after some of these changes retroactively. If I install a FIOC, a job that would not be compliant with FIOC in H1 of next year, and the rule happens in 2020, the end of next year, that says this is in violation, I'm not going to get penalized. Right. This is based on what they've done already. Now, they could change their tune between now and then, let's hope not. But it adds a lot of uncertainty, as you said, with FIOC. And this is much smaller, a subset of possibilities, is that you could have a domestic content equipment still also fail FIOC, depending on what those rules come out. Not to raise any more red flags with anybody, but it's a possibility. And who knows what's going to happen, but let's hope it doesn't.
Right. Hoping it doesn't happen hasn't helped me so far this year.
Hope for the best, prepare for the worst. Is that how it goes?
Absolutely.
Yeah.
You know, I'm a Cleveland Browns fan too, so
I'm sorry.
It's a life credo of mine, what you just said. So, you know, something we didn't really include in our outline is yet another rug that's been pulled out from under solar installers and homeowners, the cancellation of Solar for All. $7 billion that just was kind of shut off from programs that people were preparing to roll out and maybe invite some lower income people into the solar family here, right? Are there installers that are more hurt by the cancellation of Solar for All funding than the sunsetting of the ITC?
Absolutely. Yeah, the ones that are primarily focused on that business are the ones that are going to get hurt more, because those same projects aren't qualifying for 25D if I'm a homeowner. So yes, if your business model was to focus on those low-income households, and now that rug has gotten pulled out from underneath you, that's absolutely gonna hurt your business. And we've seen some other things happen when it comes to low-income and finance mechanisms, like Posigen, for instance, having gone away and laid off a lot of folks. So there's another piece that makes it really hard for those installers. So I mean, my thoughts are with them, because this industry is unforgiving, and things like that happen. And yeah, it's really hard to see these types of things that are supposed to be very helpful for everyone to go solar, regardless of how much money you make. It's very democratizing to have these types of funds in place, and for it to go away, that's painful.
Yeah, we've been reporting on so many interesting programs and like that we're going to, I don't know, do a lot of good, and we're just going to be positive stories that just seem like they had no downside whatsoever that are now, unfortunately, just shut off. So, and similarly, another rug pull. There was a $20 billion greenhouse gas reduction fund that would provide low-interest loans for renewable energy projects in poorer communities. That also may be done. That affected green banks. I don't know if that's in your area of expertise, or how that is going to affect financing it.
I mean, low interest rates are it's music to everyone's ears. So that does hurt. What's going to happen, and hopefully someone comes in it with a good mindset, is now we're going to have private folks come in to try and finance some of these projects, and their interest rates won't be as low. So that is going to also adversely affect me as a business owner if I'm focusing on those types of markets, right? I'm not going to be able to come to the homeowner and say, hey, here's a project with a low interest rate that you can't get from anywhere else because it's been subsidized to help us fight climate change. Now that that's gone, private loans will come in, whether it be, and nothing against obviously all of the lenders out there, but they aren't being subsidized. It's private companies trying to help these loans that can't compete with that type of a product. So, yeah, that does hurt a little bit as well for that installer. We're saying lots of bad news.
I know. It's unfortunate, but that's just the reality of things right now. So getting back kind of to the TPO discussion, because that's where we think there's going to be a shift in business in 2026 for installers that are focused on that. Is there any more advice you want to impart on how to evaluate a TPO provider, or can I have multiple that I'm working with at one time? What are just some high-level, like 101 things to keep in mind?
I'll start with the second part of that question, because that is way more important than a lot of people want to focus on, and that's, yes, have multiple partners. There's nothing against having multiple partners so long as their contracts don't contradict each other in what you do. But what's going to happen is if you don't have at least 3, 4, and it depends on the size of the installer, right? But let's assume you're a small to medium-sized business doing 10 to 20 jobs a month. It does not hurt to have 3 or 4 finance tools in your back pocket, and you're using 1 or 2 on a daily basis, right? Because ultimately, if one falls out, you have someone you can look to at the bench, call them onto the field, and start using, right? So it's incredibly helpful to have a bit of a portfolio. And some don't mind being a B player, so long as you use them every now and then. Just know your lenders well enough. And again, the questions I would ask are, okay, if you are, and this is maybe lifting the veil back a little bit, if you are a prepaid lease provider or PPA provider, do you have any issues with that homeowner also getting a loan for that prepaid part, right? Because there's going to be points now where we have 2 products kind of stacked up on top of each other. We have the prepaid product that covers the 30% and that 70% who a homeowner might have the cash to pay for that. But what if they don't or don't want to? then you would have a loan provider. And are they both compatible? Are they both okay to work with each other? Are there, and this is a question I would ask if you're an installer, which of them have UCC1 filing as reported on the homeowner's house, right? Because there's positions there that they might contradict each other. Lender might not like that the prepaid lease provider is doing that. So there's tons of questions they can ask, that being one of them, and just understanding how their rules work so that you don't, I guess, work outside of those rules and violate a contract and hurt your business ultimately. So yeah, lots of questions, lots of new things need to be learned by installers right now, and I don't envy them. It's tough. And we were already in one of the most difficult industries with lots of regulations we have to fight that make our costs much higher, and now we have to go and learn new finance mechanisms that help us sell more deals.
Yeah.
So
And no one wants to do that.
no,
I sure don't.
No, I don't, and I'm in it.
Right. So just as we wrap up here, I will say we said a lot of negative things just because a lot of negative things have happened in the solar industry this year outside our control. But the space for loans, I felt more positive about the even without the tax credit, that there may be more. It might not be as dire a picture for your customer, presenting them at the kitchen table what their financing options are, than I was maybe initially thinking. I mean, it's not good, but it sounds like there's going to be some emerging options that people can latch on to.
Oh, absolutely. Yeah, I mean, I still think there's optimism to be had, because look, I mentioned earlier, dealer fees are probably going to start to go away. That has been the number one.
Oh, that's huge.
Yeah, that's been like the number one gripe I get on a daily basis from some of our customers is like, do you have any dealer fee free options? Well, now a lot of them are forced to do that.
Yeah.
So there's some good news there. Look, we're in the solar industry. Resilience is like one of our key benefits, right?
Yeah.
We're resilient ourselves. We run businesses that have helped other folks weather storms. Now we got to learn to do it ourselves a little bit. So it's going to be maybe a hard 2026, but those that figure it out might prosper and have better years than they did previously because they found out the right fit for their customer, the product that helps them spur more. And look, positions like this make innovation happen, right? When we're back up against a corner, that's when the bright ideas come out.
There we go. We found our note to end on. I appreciate that, Josh. Thank you to the SunCast Media team for setting up this great spot. Thank you to the Wärtsilä sponsorship for making this happen. RE Plus 2025, good time. And thank you, Josh, for stopping by.
Thank you for having me.
Yeah, doing this.
Yeah,
appreciate it.
Great.
All right.